Hi, this is Karim Rahimtullah again, co-founder of The War Room, along with my partner, Brian Bottarelli. What I'm going to do today is talk about what we're doing in The War Room when it comes to stop losses and what you can do outside of The War Room when it comes to stop losses. Now, if you don't know what The War Room is, click on that link below, takes you right to the site, gets you all the information you're ever going to need about The War Room, and hopefully we'll see you there. So let's talk about stop losses. Probably, I can't say it's the most important thing you'll ever learn because I said that about position sizing, and then I said that about limit orders too. So anyway, it's probably one of the top 3 things that you really need to know, okay? Stop losses. Sounds exactly like what it is. It's a stop loss, okay? So you want to, and I mentioned this last time when I talked about position sizing. When you use a stop loss, what you want to do is establish how much you're willing to lose, okay? Think about it, how much you're willing to lose. This is a trading discipline that you have to understand and you have to embrace and acknowledge. You go into every trade and you define your risk. What's my risk? You know, if I put $1,000 in, am I willing to lose $1,000? Would I be happy if I lose $1,000 because it was a great trade? Could have been a great trade? No, I'd be unhappy as hell if I lost $1,000. Would I be happy if I lost $250? Yeah, maybe if the chances are that I could have made, a couple $1,000. That seems like a pretty good trade-off. So you got to figure out what your trade-off is. I use a pretty standard stop loss when it comes to trading stocks. Different with options, and I'll explain that in a second. When I trade stocks, I use a 25% stop loss. What does that mean? It means if I invest $10,000, I am willing to draw down up to 25%, meaning I'm willing to go down to $7,500 before I cut that investment loose. So I'm willing to lose $2,500. Hopefully it won't get there. It might go down $1,000. I'm not going to cut it loose. Stocks go up and down, okay? They don't just go up, they don't just go down, they go all over the place. So you've got to give yourself some leeway. So let's say you buy Inseego at $10. You're saying that if Inseego goes down 25% or to $7.50, you'll sell it the following day. If it closes at $7.50, you'll sell it the next day. And you'll limit your loss to 25%, which is really important because, again, you got to have money to play again. Okay? If you have no money left, you're toast. So what's the point? You don't want to be like a one-hit wonder, or in this case, you don't want to be a one-trade wonder, okay? So you want to be in the game for the long term. So that's what you do with stocks. You place a 25% or 20%. If you're really nervous, you go 10%. But I wouldn't advise 10% because that's a really narrow stop loss. You can get stopped out like that, and then you see the stock go up $10. And you're like, oh my God, I stopped out at 10%, and 2 days later, I could have doubled my money. You don't want to be in that position. So give yourself some leeway when you are doing a stop loss, okay? Very important for your portfolio. You've got to have a defined strategy of risk. How much am I going to risk? Okay, really important stuff. Okay, so in options, this is a little bit more tricky, okay? Because let's say you look at a stock. The stock trades with a really narrow spread, $10 by $10.01. That's only a 1 cent spread. Not a big deal. Option might trade by a buck by $1.50. That's a 50-cent spread, all right? So if you bought it at $1.50 and you put a 10% stop loss on there, all of a sudden that means you're saying if it goes down 15 cents, I'm out of here. Well, if it's a buck on the bid and $1.50 on the offer, and you paid $1.50, the next guy who wants to sell it sells it at the bid, gets $1, you get stopped out and nothing really happened. But you just lost a lot of money. Nothing happened. So in options, you want to have a much wider spread. How much wider? I go 50% usually. It sounds like a lot, but you need to have that because options just move up and down. And in fact, on some options, like a leap option, which is a long-term option, I don't use a stop loss at all because I'm investing so much less than I've got in the stock, but I'll leave leaps for another time. Okay? So stop losses are critical in order for you to have defined risk and maintain your capital. Okay. Now, if you want to place a stop loss, you go onto your broker's site, and where you're trading, where you're buying and selling, you've got the orders, you're saying buy X, buy Y. There's another little section that says stop loss. You click on that and you put in the price at which you want to be stopped out at. If it goes to that price or below, you get stopped out. So you want to be able to know these different tricks so that you're not losing a lot of money in case it goes against you. Now, at the War Room, we don't get options or stocks that go against us very often. We've got a pretty damn good track record. Okay, a really good track record, a great track record, okay? But if you want to find out more about this and more about other topics, click on the link below, takes you to Trade of the Day. That's where you'll find out a lot more information. We send you information daily, advice, trading tips, stock tips, you name it. Sign up for Trade of the Day, and we'll see you there. Thanks.